In this video, we're talking about how can you get long-term care coverage in place so you can opt out of the Washington State long-term care tax if you're under the age of 40. So because this new tax is going into place really quickly, the insurance companies have been inundated with tons of calls from young folks. So in response to that, they are raising their minimum age requirements. So it was around 35 before, many of them are going up to 40 now. So if you're under the age of 40, you probably can't find a standalone long-term care insurance policy, or even one of those asset or hybrid policies also have raised their minimum ages for Washington State. However, there's a solution. You can actually go ahead and get yourself a permanent long-term care policy with a true long-term care rider attached to it. Now let me explain what that means. So permanent life insurance policy, it cannot be term, it can't be grouped through your employer. It has to be a private policy purchased on your own. It could be variable, it could be indexed, universal, or whole life. Doesn't matter which one you pick, as long as it has a true long-term care rider attached to it. Now, when I say true long-term care rider, there are two types of riders available. There's the one that falls under tax code 7702B. That's the one you want. So that one you have to actually pay a separate fee for to purchase that rider and add it onto your policy. There's another rider called the 101G rider, often known as critical care or chronic illness rider. It actually does cover the same benefits, but because it's under that different tax code, it doesn't meet the requirements for the exemption in Washington State. So you want to make sure if you go to purchase a plan that it does qualify for that and it falls under that 7702B. All right, so I know that's technical, but just write those down and make sure you ask whoever you're purchasing the policy from if it falls under those requirements. So this type of policy is pretty much the only option that people have under the age of 40 right now. However, this could change. The policies could start having age requirements to purchase the riders onto them. So if this is something that you guys are wanting to do to get the exemption, don't wait on it. Don't delay and wait till October because it could change the requirements for this. So you want to make sure you get a policy in place as soon as possible so you can make sure you get the plan before the November 1st deadline. Now, as far as how does this type of long-term care policy work, it's actually pretty easy to understand. Basically what you're doing here is purchasing a death benefit from the life insurance company, call it $100,000, and then that long-term care rider is either going to be a 2, 3, or even 4% acceleration of the benefit. So what does that mean? Acceleration, it just means you're going to get it sooner. So you don't have to wait till you to pass away. It's what they call a living benefit. So for example, if you got a 2% rider on it, 2% of 100,000 is $2,000. They're going to pay you $2,000 per month until that policy is exhausted. If you got a 4% rider, they're going to pay you $4,000 a month until that policy is exhausted. So the higher percentage you pick, it's going to raise the cost. It's also going to exhaust the policy a lot quicker. You can also purchase a bigger benefit to get a higher monthly amount. So one thing to keep in mind with these policies is that they don't have any kind of inflation protection in place. So if you get a policy, say for $100,000 with a 3% rider that provides $3,000 a month today, 10 years from now, it's still going to provide $3,000 a month. 20 years from now, it's still going to provide $3,000 a month. It's not going to increase. You can't buy any kind of inflation adjustment when you're using life insurance with long-term care riders on them. So just something to be aware of if that's the route you're going down for the long haul. So I hope you found it helpful. Make sure you share this with all of your friends that are under the age of 40 that are looking for an option to opt out of the Washington State Long-Term Care Fund. Remember to subscribe below, and I'll see you guys next week. Remember that your future depends on what you do today.